Cathie Wood is not exactly the investing superstar that she used to be. Throughout 2020, she basically became the most popular investor on the internet, with people like Meet Kevin and a bunch of other YouTubers being practically obsessed with her. They were convinced that she was the best investor of all time and that she could do no wrong. Now, all of her investments were really based on one simple idea: innovation in the markets, changing how businesses work and making a lot of money in doing so. Some of her biggest picks were DocuSign, who were innovating contracts, Teladoc, who were innovating the healthcare industry, and Robinhood, who were innovating investing itself. Now, this worked well in 2020. It was the year of COVID, the pandemics, and the lockdowns, and it was also the year of loose monetary policy, of money printing, quantitative easing, and 0% interest rates all over the world. Stocks boomed and tech stocks in particular absolutely exploded, and so Cathie's funds exploded with them too. Her flagship fund, Ark, basically became an example of an index fund of all of these hyped up tech stocks. There was a problem though. It was that this was all a little bit delusional and entirely irrational. You see, Teladoc wasn't actually innovative. It's just Zoom with doctors. Zoom itself wasn't even innovative either. It's just Skype with groups of people marketed in a certain way. Robinhood isn't actually innovative. It's just payment for order flow business model with a fancy little app. And DocuSign isn't actually innovative either. It's just e-signature software. When 2021 came along, Cathie's fund seriously started to struggle, and she went from making hundreds of millions of dollars and even billions of dollars for her clients to losing them billions of dollars over the course of a few months. By the end of 2021, it was pretty clear that the magic was gone. Her funds were down across the board, and she was losing investors by the day as well. Come 2022, and the situation was only getting worse. She has performed awfully so far this year. She's lost her investors billions of dollars again, and she's got almost every prediction she's made wrong over the last 18 months. Really, this all came down to one simple idea. She thought that inflation was fake. She thought it was frankly impossible for us to see inflation, and that quantitative easing wouldn't cause inflation because of modern monetary theory. She actually spearheaded this whole inflation is transitory argument, and she put all of her money and her fund's money behind that idea. We know at this point that she was ridiculously wrong and it cost her dearly, but she never actually backed down, and she continued to make that claim that inflation is a false problem, that deflation is the real issue, and that nothing else really matters. Now, just last week, she came out and gave an interview with Bloomberg talking about the markets, about investing, and a bunch of other things too. And then she actually gave a pretty ominous prediction about what she sees happening with the markets next, and it's got a lot of people very worried. So what exactly did she have to say?
Cathie, the key debate on Wall Street, what everyone is discussing is the Fed going to continue hiking rates, or are they going to stop and turn around to come back down next year? What do you think?
We think the latter. We're getting all kinds of signals that the economy is very weak. I know a lot of people are focusing on last week's big employment gain in non-farm payrolls. But if you look at household employment, which is a much broader based survey of employment, that has been flat to down for the last 4 months. If you look at claims, we've never seen a faster increase off the bottom than we've just seen. We're up about roughly 50% from the lows. Many people, I don't think, have taken a close look at that. And we're hearing one layoff after another. And we know the Challenger survey says that layoffs are up 55 to 60% year over year. And I think this is all related to inventories. We have a massive inventory glut. And so I think that the last few hires, I think companies were really happy to get them because labor was in short supply for so long. But I think that
now there's an
we're
inventory
probably going to see the
headcount.
unwinding.
Yeah, Cathie, it reminds me, the last time I saw you on Bloomberg TV, you were talking with Ed Ludlow out of Bentonville, Arkansas, and you said to him, we have a real inventory problem. Walmart and Target had just been out with numbers that were concerning in terms of the buildup of product, and you said deflation is more of a concern than inflation. Do you still think that after the big prints that we've seen, and we're still expecting, for example, 8.7% headline CPI on Wednesday?
Yes, I still think that because the evidence is piling up Now, the CPI and in some measure, the PPI, both of those are lagging indicators. The Fed is driving policy off of lagging indicators. If I look at Dr. Copper, the commodity with the PhD, it had been trading for a year in the $4 to $5 per pound range. It's now down to $3.50. It's had a decisive break. And if you look at how that's going to feed into the indexes, it'll feed in slowly, to be sure, but just month over month, copper is down roughly 20%, and year over year, it's down roughly 20%. So that's the activity side of things. If you look at the real inflation gauge out there, it's gold. Gold prices peaked in August of 2020, 2 years ago. And we've been in a trading range, to be sure. We're at the low end of that trading range now.
Right.
If the Fed continues to tighten, we believe the dollar will turn back up and these commodities will continue to fall.
So, Cathie, if we have disinflation coming, and in your view, the economy in a very weak spot, big debate right now is whether we're currently in a recession. Obviously, it's up to the NBER to officially declare that, but curious to hear your take on where we are currently.
Yes, well, we believe we're in a recession. 2 consecutive quarters of real GDP declines is the beginning of that definition. 3 consecutive months of declines in leading indicators, which we have now, would suggest the same. Now, I think the differences are, we see an inverted yield curve, and that, of course, is also a warning sign. I think our point of view is that this is going to be a severe inventory recession, but we didn't have the systemic excesses like we did pre 08-09 in the mortgage market. So it's an inventory recession here. And while most economists are saying, oh, okay, the inverted yield curve points to a recession maybe next year, we believe we'll be coming out of it next year.
So she said quite a lot there, but there were just a few important bits to pick out. Firstly, she thinks that inflation is already on its way down and that CPI data and PPI data is a lagging indicator, and actually behind the scenes, inflation is a non-issue at the moment. She does also think that the economy is really quite weak, and in particular, she thinks that's because of inventory buildup, where businesses bought loads of stuff and extra things to leave in inventory to then sell on later. But the problem is they are now unable to sell those products and they need to slash prices to get them to actually move. Now, we are seeing this with a bunch of companies like Walmart and Target in particular, and this is happening right now as we speak. She also made the claim that this is why the US is already in a recession. She then ties that idea in with inflation being over. Prices being slashed to get rid of this inventory buildup equals deflation, and that's the opposite of inflation for obvious reasons. Finally, then, she basically made the point that the Federal Reserve pivot is going to happen probably in early 2023 when data proves that the US is categorically in a recession. The Federal Reserve will stop hiking interest rates. They will slash them back down to 0%. They will start money printing and quantitative easing again, and then her stocks and her funds will boom. Now, there is quite a lot to tackle there. There's some good and there's some stuff that's absolutely wild in my opinion. But to start off, Cathie is absolutely right about what a recession is. The conventional definition is not what's defined by the NBER. It is 2 consecutive quarters of negative GDP growth. She knows we're in a recession, and I agree with her wholeheartedly there. There are quite a few problems with the other things that she said there. Firstly, she's claiming that actually this recession is almost entirely due to this inventory buildup, and she used the example of companies firing their staff because of this inventory buildup, and I just don't think that's the case. This right here is an example of some of the biggest companies who have been firing staff over recent weeks, and as you can see, this list just goes on and on. Some of the companies are Data Robot, who fired 26 of their employees, Blend, who fired 25% of their employees, Groupon, who fired 15% of their staff, Robinhood, who fired 30%, Shopify, who fired 10%, OpenSea, who fired 20%, Coinbase, who fired 18%, BlockFi, who fired 20%, Gemini, who fired 10%, and Better.com, who fired 50%, and then Fast, who went bankrupt and fired 100% of their employees. This list really does just go on and on and on. Now, the reason I bring this up is because every single one of those companies I just listed is a software company, and they don't have a single piece of inventory that they have to sell. For them to sell a piece of software, it costs them close to $0. Cathie's idea that these layoffs are caused by excess inventories just simply is not true for all of these tech companies who have been firing thousands of staff over recent months. These layoffs are caused by weak consumer demand, weak demand in general, and a weak capital environment. So this isn't going to be a small or a short recession, in my opinion. This is going to be a major one, and Cathie thinks it's going to end by 2023. I'm afraid I don't agree with that. I think it's going to be far, far worse. Now, this does lead on to another problem I have with Cathie's prediction. She basically makes this claim that inflation is over because of the inventory buildup and what that will do to prices for products from companies like Target and Walmart. Now, I think that firstly, the inventory buildup is actually a little bit overstated by her. And also, I think that the other causes of inflation are massively understated. There's still just too much economic activity in the US. There's still supply side issues all around the world, and China is still locking down another 10 million population city every other week for COVID lockdowns. Cathie also is entirely ignoring the US government's actions to cause more inflation. Now, I've tackled this loads in the past, in particular in quite a long video yesterday looking at this specific issue, so I'll spare you all the details if you want to watch that video and see just how Biden and the US government is causing more inflation. Then I'll leave a link down below for you in the description. In short, though, the Inflation Reduction Act will actually cause more inflation in the United States. Student debt relief of cancelling $10,000 for every student with a student loan, that's going to cause more inflation. Stimulus checks in over 20 different states, well, they're going to cause more inflation. In 2021, we saw Cathie Wood use gold and bond prices to try and justify her belief that inflation was never going to come into the US. She's now using gold and bond prices to claim that inflation in the US isn't real and that it's already disappeared. She literally said that gold is the #1 inflation gauge, and because gold prices have been down since that peak in 2020, then there's been no inflation since then. This is categorically untrue, and she's literally just ignoring the fact that prices are higher, that inflation in the US at this point is an absolute fact, and there's no denying it. The question has to be asked then, why is she saying all of this? And I think it's because deep down she just wants it to be true, because it's the only real way that her fund does well over the next few years. If inflation isn't over, then the Federal Reserve will keep hiking interest rates and her innovation fund will continue to flail. She needs inflation to be over so that the Fed can cut rates to 0% to print money again to start quantitative easing, or else she'll continue to lose. Sadly, though, just wanting this to be the case doesn't make it true, and I think Cathie is making the identical mistake right now that she made over the entirety of the last year. She's massively underestimating inflationary forces. Now, I want to finish actually on a bit of a positive note for Cathie Wood, because there is one thing I do agree with her with. She is predicting and clearly wants the Federal Reserve to pivot, and I do think it would be disastrous if the Fed were to pivot and stop hiking rates, but I don't think it's impossible or even that unlikely to see it happen. Over 2021, the Federal Reserve absolutely disgraced itself, and it proved it firstly didn't know what it was doing, and secondly, it didn't care about its actual mandate of price stability in the United States. Now, the Fed is still made up of the exact same people who lacked integrity then, and I firmly believe they still lack that integrity today. I would not be surprised at all to see the Federal Reserve make the wrong decision here again. This would be a lifeline for Cathie, and that's the area where actually I think there's a decent chance she ends up being right here, that the Fed does pivot, albeit unjustly, and turns on the money printer once more. But in the long run, all that will do is cause inflation to spike once more, and that will then cause another down period for ARK Invest. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. It really does help. If you want to join our exclusive community, then check out our Patreon. You get access to our Discord server and extra content like access to my portfolio and buy and sell alerts for all my own investments. Thank you all for watching. Stay stoic. Until next time.